Amidst the global economic uncertainty, nations are beginning to lean to the non-interest finance institutions and non-governmental organizations as a source of alternative financing. Welcome to another edition of the Islamic Finance Weekly. This episode features Mr. Yunus Mohammed, President of the Africa Islamic Economic Foundation, as he speaks on the role the organization is playing to boost the non-interest finance market in Africa. He began by giving insight into the establishment of the AIEF in Ghana and its work and scope as an organization.
The Africa Islamic Foundation is an independent development organization that was established in 2013 with the objective to provide a distinctive Islamic perspective on economic development and social issues as a solution framework for Africa's economic, social, and environmental challenges. We are registered in the Republic of Ghana as a non-profit organization, and our work encompasses a range of advisory, research, policy, development, and field-building activities to unlock the potential of Islamic economy and private capital to drive inclusive economic growth and development in Africa. One may ask, why are we focused on Islamic economy instead of Islamic finance? It is simple. Islamic finance is a subset of Islamic economy. Others would prefer to call it halal economy. The term Islamic economy refers to a system of economic activities, be they production, quality and standards, consumption and financial, that are regulated in line with the principles of Islamic law, which we also call the Sharia. The Islamic economic theory promotes economic development in three main ways. One, direct link to the real economy and fiscal transactions. Two, prohibitions against harmful products and activities. And thirdly, promotion of economic and social justice. Here, it is interesting to know that a large portion of Islamic law is dedicated to how the economy of Muslim societies should operate. Part of the body of laws regarding the economy forms the foundation of what has become the modern Islamic finance industry. It therefore goes without saying that the root of the Islamic financial system is the prohibition of interest-bearing activities in societies, besides many other valuable principles that, if applied, will sustainably enhance the economic well-being of the individual and the society at large.
Speaking further, the president said Islamic economic theory promotes development in three ways. Firstly, direct link to the real economy and physical transactions, prohibition against harmful products and activities, and thirdly, promotion of economic and social justice. Mr. Yunus Mohammed believed Islamic finance is evolving as a source of alternative financing.
Sure, Islamic finance is growing as a source of finance for entrepreneurs and investors who have taste for ethical investing and sustainability around the world. Over the past few years, one of the rising stars in the world of finance has been Islamic finance. Musharaka, as we all know, is one of the equity-based mechanisms of Islamic financial contracts. It is suitable for financing both big and small ticket projects since it involves profit and loss sharing. As we all know as well, the Sharia prohibits Muslims from earning income by charging interest, but it permits them to generate income through the sharing of risks and rewards between the parties to a transaction, employing the no-pain no-gain strategy. This profit-sharing mechanism is believed to encourage people to become partners and work together rather than to enter into a creditor and debtor relationship. You may agree with me that partnership promotes mutual responsibility for the outcome of the financed project, which is believed to increase the likelihood of success of the venture. A tangential aim of the partnership approach is to help increase the growth of successful projects, also provide stimulus to the economy. On the basis of Z-scores analysis, some scholars have proved that the Islamic financial system is financially stronger and less risky than conventional banks. In the conventional system, a depreciation of assets, just a minor depreciation of assets due to an exogenous shock, can easily downgrade the bank's equity capital. And what causes that? Since its depositors are fixed value securities, it may lead to risk to provoke bankruptcy. In Islamic finance, the possessors of investment accounts don't have fixed value securities. And in macroeconomic or bank-specific crises, investment depositors automatically share the risk, which allows an adjustment of the liability in case of asset reduction. No doubt, Musharaka has the potential to contribute significantly to project financing. As I have said earlier, Islamic finance is based on the themes of partnerships, ethical banking, and socially responsible investing. Frankly speaking, if our banking and investment practices were to adhere strictly to the principles of Islamic finance, which are based on the noble ideas of entrepreneurship and transparency, we will not only have set in motion major projects of national and international significance, but will have minimized some of the economic crises that bedevil our country.
Mr. Baba Yunus Mohammed believes Islamic finance is evolving as a source of alternative finance, sustainability, and wealth creation. From his presentation, Baba Yunus noted that Islamic finance is based on partnership, ethical banking, and socially responsible investing.
Murabaha financing is based on a markup or cost-plus principle, in which a financial institution is authorized to buy goods for a customer and resell them to the customer at a predetermined price that includes the original cost plus and a negotiated profit margin. This contract is typically used in working capital and trade financing transactions. In this way, one can safely say that a Muraba sale agreement, the item of sale is real, not fictitious, and the sale price includes the margin and profit of the financing partner. Both the price and period of payment are agreed in the contract, and once executed, the price is not adjustable. However, based on mutual agreement, the payment period may be adjusted backward or forward to take care of unexpected developments. Because Murabaha is based on actual sale, the problem associated with time value of money does not arise at all, as it would have been in the case of interest-based lending. Therefore, while interest-based loan agreements are being restructured due to COVID-19, Murabaha-based agreements have remained relatively intact with little adjustment to periods of payment. This may suggest that Murabaha possesses the necessary instruments of financial system stability.
The Islamic finance expert gives insight into the element of takafu as an insurance that is based on mutual benefits.
Takaful, also known as insurance in the conventional sense, is based on mutual benefit whereby resources are pooled together to indemnify participants for harm or loss covered by the insurance policy and create opportunity for investing unused funds for the benefit of policyholders. This means that Takaful has the elements of both social insurance and investment outlets. COVID-19 has led to the imposition of lockdowns, during which many economic activities were suspended. Policyholders hardly present claims to Takaful companies. However, because all unused funds are supposed to be invested, both participants and operators stand to gain something.
It said, Islam encourages the institution of Waqf, known as Islamic endowment. It is constituted with the long-term objective of preserving the assets in order to benefit the society in the long run.
Islam encourages the institution of Waqf, which is also known in the English language as Islamic endowment. Waqf is different from normal charitable institutions in the way that it is constituted with long-term objectives of preserving the asset so that it may benefit the society in the long run. Historically, Waqf has been one of the important organs in Muslim societies and has played a significant role in the overall prosperity of society as well as economic development. Since Islamic finance is expected to contribute to socio-economic activities of society, Waqf is of great importance to the Islamic finance industry. It serves as a vehicle for the mobilization of funds that can be used for benevolent activities. If you like, you can call it benevolent loans, which is also known as Qard Hasan in Arabic, and other philanthropic or socio-economic activities that will better the society. Though not a fundamental requirement, the existence of Waqf structures gave Islamic finance wider acceptability and make it more inclusive.
The president of the Africa Islamic Economic Foundation in Accra, Ghana, highlighted the issues around trade, commodities, and exchange in Islamic finance.
The Arabic word bay' refers to any transaction in which ownership of an asset is exchanged between a seller and a buyer in return for money or by barter. In other words, bay' can be translated as sale in English, and it is commonly defined in the Sharia as the exchange of a thing of value by another thing of value with mutual consent. More specifically, it means, I quote, the sale of a commodity in exchange of cash, unquote. Bay' can be made as a musawwama, in which case the price of the item is stated and the buyer agrees or refuses to buy, or as a murabbaha, in which case the seller discloses the cost of the goods being offered for sale so that the buyer may agree with the profit margin. This concept, in my opinion, goes beyond just having contracts of exchanges or transactions. It entails having robust policies for regulation and supervision of all the important entities who act as intermediaries of those transactions and exchanges. Its drop-down effect is that it promotes economic growth through capital accumulation, and technological progress by increasing trading activities, mobilizing and pooling savings, and where the transactions are of international nature, it facilitates and encourages the inflows of foreign capital, as well as optimizing the allocation of local capital. Additionally, it reduces poverty and inequality by broadening access to finance to the poor and the vulnerable groups in society. It also facilitates risk management by reducing their vulnerability to shocks and increasing investment and productivity that results in high income generation.
In summary, Baba Yunus app on robust policies, regulation and supervision of all important entities who act as intermediary of those transactions and exchanges.
Well, the current global COVID-19 pandemic has exposed serious underlying weaknesses in the global financial system, which is no doubt dominated by the conventional system, and this might have created an opportunity for the Islamic finance industry to prove its worth by making known its distinct values and legal principles. As a result, practitioners and Sharia scholars should place more emphasis on innovation to produce Islamic finance products that are true representatives of the Sharia principles and in line with the prevailing circumstances. And by encouraging and supporting factors that make Islamic finance different from the conventional options, the long-term value and confidence in the Islamic finance industry could increase. At the moment, I must say that I'm very, very much afraid that there is a risk, a very high risk in particular going on, which may likely affect the credibility and reputation of Islamic financial institutions, as the Sharia principles being offered are being diluted, and the Islamic finance products they are using to serve their customers have become mere replications of the conventional ones. In order to support this innovation, I should advise that appropriate legislations for the Islamic finance industry need to be drafted along with competent regulatory bodies to keep a check on industry practices. In this regard, one must recognize the notable efforts that are being made by famous international institutions like the Islamic Development Bank, the Islamic Financial Services Board, and the Accounting and Auditing Organization of Islamic Financial Institutions. Also, at our own regional and local levels, the Africa Islamic Economic Foundation and its counterparts, I'm talking about the consulting firms, organizations, learning institutions, particularly here in Nigeria, are doing their best. But in my opinion, there's a lot that needs to be done. I will also recommend that the Sharia scholars involved in advisory boards of Islamic financial institutions must have an in-depth understanding of the financial instruments used in transactions, and this is in line with the legal maxim which says that, and I quote, a ruling is decided based on the understanding of the issues at hand. This could be achieved through more two-way collaboration between industry practitioners and Sharia scholars, and together they may collectively assess from all angles the Sharia compliance aspects of a financial instrument or product.
On the current global COVID-19 pandemic, it noted that it has brought out serious underlying weaknesses in the global financial system, which is dominated by the conventional system that has created opportunities for Islamic finance industry to prove its worth by making known its value and legal principles. And that will be all for this week on our Islamic Finance Weekly program. To watch more videos, news stories, reports, and analysis on Islamic finance, log on to our website www.prosharend.com. Also, you can engage us on our social media handles displaying on the screen. Many thanks for watching. Do stay safe and see you again next week.